All right, today we're going to talk about interest rates. I've had some questions from people about interest rates and where we are in the cycle and stuff like that. So I'm just going to do a quick couple of videos on this. First video, this one is going to be about interest rates and where we are in the cycle and some of the key factors there. And then I'm going to do another video on what I'm doing about this. So if you're interested in what I'm doing about it, then skip this video and go to the other one. But this one is I'm attempting to just lay some groundwork for some fairly important stuff in terms of financial markets. Okay, just to kick off, I want to talk about the Federal Reserve in the U.S. They're the primary central bank, and they influence a lot of what goes on in the world in terms of monetary policy and also in financial markets. Generally, I look at interest rate cycles as sort of like the like seasons. So when interest rates are dropping, what that generally does to financial assets and other assets is it raises the price of them, because when interest rates drop, that makes holding assets like stocks or real estate more valuable, even bonds too. Bonds rise in price when rates go down. So that's kind of like the spring season when you get declining interest rates, and usually that's after winter. So winter would be something like 2001, after the dot-com blow up, would be 2008, 9, the global financial crisis, or very briefly in March, April of 2020. So what happens is the central banks, they respond to economic shocks by reducing interest rates, increasing money supply, and what that does is it pushes up financial assets, and then you get a summer period where rates are low and they stay low, and everybody's doing great, and there's no clouds in the sky, and that's kind of what we have just experienced with a lot of stocks between third quarter, fourth quarter of 2020 and about the same time in 2021. So we had this nice period where everything just went up and rates were low, they were stuck at zero, and everybody's happy because they were making money. And what's happened recently is one of the most important things that has happened is that we have these inflation rates now in almost every country, where the cost of living was rising very fast, in response to government printing money and making basically very easy monetary policy. We've seen housing prices go up. I think it's 20%. I'm in Canada. It was up 20% year over year in January, and I think that's similar in a lot of other Western countries too. So we had these huge inflation rates. The American print, I think, was 7.5 last week, 7.5%, which is 40-year high. And this has become a big political issue, and all the attention now is on inflation. So what happened recently was Joe Biden came out and said, we know inflation's bad, Jay's going to fix it, right? Referring to Jay Powell. And so now Jay Powell, the head of the Federal Reserve, his primary mission now is to deal with inflation. It's front page news, it's high political value item. So he's going to go hard at inflation. And if you listen to any of these central bank talks right now, what they'd say, we're going to deal with this. We're going to tighten monetary policy. We're going to reduce the money that we're pushing into the system that we've pushed into there since like April 2020, and we're going to start raising interest rates, and we're going to deal with this inflation. Now, why that's important is because it pushes us into autumn, a fall of the interest rate cycle. So interest rates will go up. Well, they're assuming nothing severe happens to markets, they're going to push interest rates up, which means that anybody who's buying a house, the amount of mortgage they can afford is now going to shrink. And just for anybody who doesn't understand that, so when people buy houses, and this is why interest rates matter. So when people buy houses, they don't buy the house based on the price of the house. They buy it based on the payment they can afford, right? So if at a higher interest rate, you're going to be able to afford a smaller mortgage than at a low interest rate, right? So when interest rates go up and the banks follow, then what happens is the mortgage that you get approved for at the bank goes down, and you can't bid as high on these houses. So then naturally in the market, the real estate market, the prices come down, so the properties can get sold. So that's why interest rates really matter to the housing market, and the housing market's a huge part of the economy. A similar sort of principle works in the stock market. I won't get into it right now, but basically, if you're buying a stock, you're essentially looking at how much earnings you're going to get for the amount that you invest in the stock. And if you have a low comparison rate on in the bond market, let's say bonds are trading at 1%, then a stock yielding 5% business return looks good. But if interest rates go up and the bond market goes up to 3%, you might need an 8% return on your stock to make that make sense. And that's why stocks come down. They come down until the yield goes up to a level that's attractive. So we're starting to see that in the markets right now, especially in the unprofitable tech sector. Like, I think that's been absolutely decimated, a lot of these companies, since the beginning of January, in anticipation of these interest rate hikes. So we're in autumn right now, and winter's coming. Now it's not like a calendar where you can predict when winter's coming. It's a little bit more like Game of Thrones, where winter's coming. We don't know when, and we don't know how bad it's going to be, right? It might come next week, or it might come in 2 years from now. We don't know, but we know it's coming, because that's always what happens. Central banks will tighten their monetary policy until one of two things happen. One, their goal is met. So inflation would have to come down to about 2% from 7.5. If that happens, it might happen. If it comes down without any major problem in the financial markets or any other part of the system breaking, great, they've done their job. They've landed the plane softly. But usually what happens is they tighten the policy and they crank rates up, and at some point something breaks. Right? It happened in 2018. It happened in lots of other places, but you don't really know what's going to break. If the stock market fell by 40%, they might stop raising the rates, and that might be winter. So I don't know what's going to happen. I don't know when it's going to happen, but what I do know is that this is the time to be defensive, because very rarely do good things happen when interest rates are going up. There's some places to hide, but this is the time where I'm not going all in. And I'll share that in the next video about what my actual strategy is. But just be aware that my main message here is winter's coming, and so let's get prepared for it. If it doesn't come and it's a nice soft landing, great, that's fantastic. But personally, I want to be able to survive a big problem if it comes along. I don't want to be overexposed to things that are high risk right now. And like I said, I'll go on the next video and I'll talk about my actual investing strategy here. So hopefully that gives some color on where I think we are in the interest rate cycle. And again, don't take this as gospel. This is just my view on it. If you go to any of the macro sites like Real Vision, or do some of those podcasts, you'll hear that there's not really agreement on a lot of it. except that the Fed is focusing on inflation right now. And that's typically what everyone seems to agree on right now. We don't know how fast they're going to raise rates. We don't know when they're going to stop. We don't know what their goals are. We don't know what the outcomes are going to be. But we're definitely in that part of the cycle. All right. Well, hopefully that's helpful, and I'll see you in the next video, guys. I'll put a link up here, right here. Can I do maybe here for the next video about my strategy to deal with this stuff? Okay. Have a great day. Thanks.